The time has officially come. The stock that makes up 7 or 8% of the S&P 500 that can raise the entire stock market or crash it altogether has finally released their earnings report. Nvidia is here and everybody has been waiting for their earnings report because if they show a sign of cracking, the entire economy can drop with the stock market. But that's not exactly what happened today. We actually got some overall good news from Nvidia, even though the stock dropped. So here's what you need to know. Nvidia beat on their top and bottom lines. In fact, their revenue grew this quarter, or they expect the sales growth this quarter will remain above 50%. So they are absolutely crushing it. The stock is up 35% this year. But the stock itself actually dropped in after hours, not too much. It closed at 181.6 and it dropped all the way down to 174 before rallying back up to 175, 176. So for the most part, it's a nothing burger. Or is it? You see, what we have to realize is the entire market was waiting for their earnings release, and them doing well today pre-stock-wise, pre-earnings release, actually led to the S&P 500 hitting another record high. So what we need to know here is, from how I look at things, is the main takeaway is that we are in a full-blown risk-on environment. There's been a lot of consolidation in the market, which we're going to look at. We're going to pull up the charts, but Nvidia has shown us resilience, and therefore the market can stop taking its breather and can continue ripping higher. So we have a whole bunch of things to cover today. So we have Nvidia, which we just looked at. The housing market is absolutely cracking, and trade war 3.0, 4.0, 5.0. Trump is back with more tariffs on India, and we're going to take a look at a whole bunch of other things as well, including gold. We're going to pull up the charts for that. Yesterday's number overall, everything was green, everything was looking good. Pretty small, but still noticeable gains across the indexes, and Bitcoin up just under 2% to $109,700. So we already took a look at Nvidia, EPS beat, revenue beat. Data center revenue share was a slight miss, and that's ultimately why the stock dropped, along with them not selling any of their, I think it's called their H20 chips to China. So they're not doing so well in China, but the market anticipates that will change over time. The S&P 500 at an all-time historic high. Year to date, up over 10%. So, with tariffs and everything, there's been so much noise, but as always, things only go up. Let's take a look at the housing market, because this entered my feed and it's pretty wild. The US housing market has reached its most unaffordable level in history. This is the 2006 bubble. We all know what happened there. Now, here we are, which is just insane. But you're watching this because you're a trader. Maybe you want to buy a house one day. Maybe you own a house. I don't know what your personal situation is. But what does this mean for traders? Because you're watching this because you trade. Here's why it matters. Housing stress squeezes consumer spending, which leads to weaker growth over time. We have to remember that there's leading indicators and there's lagging indicators, and housing is a leading indicator. It's going to give us a sense of consumer sentiment. When consumer sentiment crashes, that's when stocks crash as well. And so that hasn't happened yet. This is more of a long-term play, a long-term bubble that you need to keep your eye on. This could also lead to the Fed facing pressure to cut rates faster if affordability kills demand. We all know what Trump is screaming for. He's screaming for rate cuts. He just fired Cook from the Fed. All kinds of stuff going on at the Fed, but the market is expecting those rate cuts, and I think that's only going to make affordability even worse with inflation coming all the way back. Long term, housing bubbles usually end in volatility. Again, the DXY here is absolutely getting destroyed. Year to date, down 10%. So like I said, don't expect this to blow up the dollar tomorrow, but longer term, it's another crack in the US foundation. Keep an eye on bank exposure and Fed pivot. Trump drops a 50% bomb on India. This one was a little bit more of a sleeper event, but still pretty important. He slapped a 50% tariff on most Indian imports as punishment for India buying cheap Russian oil. So why does it matter? India is the US's 9th largest trade partner, so $87 billion in exports. So these tariffs obviously hurt the market. Inflation risk, yep. So again, you have to take in all this information and you have to remind yourself, well, how's it going to impact the Fed? Because what the market cares about pretty much single-handedly is what the Fed's going to do this year, specifically right now, what the Fed's going to do in September. So keep an eye on those inflation prints. If you're looking to take a prop firm challenge, Lark Funding, I've been running the company for over 3 years now. We have none of those nonsense rules that we're seeing across the industry. So you can sign up for a prop firm challenge down below. Over 100 stocks, no hidden rules, no consistency rules, and over 3 years of on-time payouts. And we're getting really, really close to crossing the $1 million mark in payouts. Let's take a look at gold. Gold is one of those assets where it's a love-hate relationship. You can either make a ton of money or you can lose a ton of money super, super fast. And oftentimes it's a little bit of both. So again, another little bit of a sleeper event where not a lot of people are talking about this, but it's approaching again its all-time high. So its all-time high was hit in July, mid-July, I think July 22nd, 20th or so, of 34.40 an ounce. Now sitting at 3,400. Okay, so the shiny rock everyone's grandma already owns is flexing on Wall Street again. So here's the deal: why is this going on? Right? If you trade gold, you have to understand the macro reasons behind why it's climbing. Number one, global chaos. So obviously we've seen all kinds of chaos this year: wars, tariffs, safe haven flows equal gold rising. Again, the dollar has been sliding. The dollar has been getting destroyed this year, down over 10%. So remember, it's that inverse correlation that you really have to understand. When the dollar drops, gold's going to go up. Okay, rate cut chatter again. Lower interest rates lead to a weaker dollar, and because of that inverse correlation between the dollar and gold, that's why gold's going up. So you really have to understand that inverse correlation. When I was trading gold rather actively, I always had DXY. I always had the chart up because I don't think you can really trade it effectively without it. And then also, as another side note, big buyers this year, central banks like China and India have been loading up their vaults like doomsday prepper. So you really have to understand that correlation. There is this thing that was posted, the Bollinger Bands are tightening and the triangle is narrowing. So it seems like there's been a lot of consolidation, and things could be accumulating and we could have somewhat of an explosion higher. If I pull up the charts and give you just an idea of how I'm looking at things, I actually misspoke earlier. Bitcoin's at 111,200. But if we pull up the gold chart, you could see here we hit the all-time highs 3 times: back in May, back in June, and back in July. And we rejected the 3440, 3450 area those 3 times. And it's just been consolidation, really a tough thing to trade since then. So what are we going to do? Again, I don't like to bet on, history being made in order to make money. So I want to wait for some kind of a pullback on the lower time frames. So we already had a really nice pullback right here, which was to the 50/38 fib and this support level right here. So this was a pretty obvious, pretty straightforward trade to take that worked out quite nicely. Now we can extend the fib higher. We bounced off the 23. So I want some kind of retracement. So is it going to break the resistance? Nobody knows. I don't know. The guy trying to scam you on Instagram, he's telling you he knows, but he doesn't know. So I'm just going to wait for the best opportunity, which is really going to be a pullback. Maybe not a deep pullback, but some sort of pullback with support, a fib, a moving average, and then that's where I'd be looking to take buys. Could you make money if you just put a pending order, right at 34.10? Maybe, but kind of risky. You need a wider stop loss. Not really what I'm interested in doing. So I'm going to be keeping an eye on this, waiting for that pullback. That's what we're looking at on gold. Some stocks that were moving: Krispy Kreme slid 3%. JP Morgan downgraded their rating, so they're not doing too well. Google axed 35% of managers overseeing small teams. So if you have been thinking, AI is not going to take over your job, well, cutting 35% of managers might say and suggest otherwise. CrowdStrike face planted, dropping from 422 to 390 because their guidance was below expectations. Delta, this was an interesting one. They have to cough up $78.75 million, settle a lawsuit over dumping 15,000 pounds of jet fuel on LA back in 2020. So they had to do this emergency landing, and so they dumped fuel, 15,000 pounds of jet fuel over LA, and so they had to settle $78 million. And MongoDB, I looked up the stock. I have no idea what they do. It's, a software data company, but they smashed earnings. And so the stock exploded 37%. Here's a nice little payout from somebody at Lark Funding. They posted this on their Twitter account, $211. So again, prop firms are the gold rush right now. There's so much opportunity out there. Anything else that's interesting? Japan's yields continue to climb. We spoke about this in yesterday's Pip Munch email. And this is really interesting because this is going to pull dollars away from the US and it's going to move it more to Japan. And so this is happening across the world. European bonds, especially German bonds, the yields are climbing rather aggressively. So keep an eye on this. If you're trading the yen, it could strengthen the Japanese yen as there's more demand to buy these bonds. But again, a little bit of a sleeper event. So keep an eye on that. And lastly, I just want us to take a look at a reminder of how crazy the market is right now. This is really bringing everything together. So let's get this crystal clear. The S&P 500 all-time high, NASDAQ all-time high, Bitcoin all-time high, real estate, gold. Meanwhile, the money supply is at an all-time high and the national debt all-time high. And the Federal Reserve, time to cut interest rates next month. And this is what's so insane about the trading world, about the economy right now, about everything that's going on. They're literally copying Japan's playbook from the 1980s. And again, Japan has had no real economic growth for decades. Does the Fed really need to pour more gasoline on the fire? This is crazy. I could not agree more. The Fed is just becoming politicized because Trump wants rates to come down. But I mean, it took 2-3 years for inflation to get under control. Inflation is still rampant. Don't believe what they tell you of it. Oh, it's only 2%, 3%. The Fed literally said last week at Jackson Hole that maintaining 2% inflation is no longer their goal. It's maximum employment. So they are going to print the money machine like never before. And everything is just going to get inflated. Everything is just going to get ballooned. And so, what does that mean? Well, until the national debt crisis, completely implodes, you have to hold assets. You have to buy assets, not financial advice. But everything is going to be getting inflated. And so the name of the game, make money from trading, buy assets. And that's really the copy and paste name of the game. Let me know if you like these types of videos. I love doing these daily breakdowns. If there's charts you want me to look at, if you have questions, let me know in the comment section below, and I will see you tomorrow. Peace.